Going over our live trades for Fed Day. Today the FOMC Trader was up on the day. We had a positive gain. We have plus 630 on live trading. The hypotheticals were plus 830. We were set up to trade one trade, maximum daily entries of one. It took two. This was an unexpected event. I got out in here manually. I saw this trade and I was surprised it took a second trade, and then I realized the code. I'm going to go over Easylanguage code for you as well in a minute, but it did something that I didn't expect it to, and so I let it ride until it came back up here, and then I got out, and the strategies overall only did about 10 points better than what I was doing. So down here I was kicking myself saying I should have stayed with the trade. Meta earnings came out after the bell, and the market spiked up again as well. I want to show you some other Fed Day strategies that we could trade in the future. This was a strategy that I sent out to my subscribers. The stock index portfolio 34 subscribers or portfolio subscribers, Al Strategy Access, were able to trade this setup today to make a little bit of a profit. We were up plus 630 per contract. Let's look at what some of the other strategies would have done in our typical stock index portfolio. The S&P strategies did well. The Nasdaq strategies did not. Chop news. This is designed to trade on FOMC day, but I did not trade it because it's part of the portfolio, and I don't want to take a lot of trades today. FOMC Trader was set up to take one trade with a defined risk of 1,000. This can trade all day, can trade through FOMC, but going forward in the future, we may add strategies like this to trade specifically on FOMC. I didn't want to do that today, though, even though it's designed for that. So you have to sit through a lot of heat on some of these strategies. You see the news chopper strategy. The market went a lot of adverse excursion on this one trade right here. But overall, it went 1, 2, 3, 4, 5, 6, 7, 8. 8 for 8 on news chop strategy. And this one is tick chop. So if you look at tick chop, short, long, and so these type of strategies do well. So there are more counter trend strategies on our S&Ps. Here is the gap fill strategy, kind of a sit and duck though. Market surged higher, it had gone lower, it had been stopped out. Gap fill and mirror were up on the day. Tick wave was up, adaptive moving average down. Tick count trend was up, and opening chop and opening chop 2 were also up. So the S&P tends to have more counter trend strategies, while the Nasdaq has more trendy strategies. So the Nasdaq didn't do very well today. A lot of strategies were stopped out. We only had one winning strategy on the day, plus 70 on EVP1 long only. This has a tighter stop than this strategy, even though it took the same long entries. The stop loss was tighter on this one, which can go for you or against you on some days. Gap continuation had a nice gain going. Stopped out on the Fed, and tick long aggressive stopped out. Mag 7 stopped out. Momentum reversal short stopped out. Overall, let's look at the money management algorithm indicator. In the money management algorithms now, I have the indicators MM, MP, and Q. This tells you the net position of the Nasdaq, the net position of the Nasdaq throughout the day. You can see it's short 1 right here, then it gets long 3 right there, then it gets short 1 right here, and then long 2 right here, and then it's flat at the end of the day. Going into the Fed, you can see 2 o'clock. You're short 1, and you are long 6 right here. And so originally the strategies did really well, up about 7K. Like I said, the S&P were long 6 going into it. Market surged on it. Then it rolled over, down about minus 2K, then up about plus 2K, and then finished up about 14, 15. Overall, we don't trade on FOMC because our strategies don't typically do well on FOMC. But going forward, if we're going to see this kind of market, we have some strategies that we can employ on Fed Day. We're going to keep an eye on the VIX, which is getting crushed, 13, 15 on the VIX. If it continues to stay down here, we're going to need to trade more strategies that are counter trend, including some of these S&P strategies are going to start working on the Nasdaq, I believe, potentially start working now that the Nasdaq has been re-indexed to reduce the exposure to some of the high flyers, I think it could be choppier. If VIX stays lower, I think it could continue to be choppier, and so we may just go with the chop. And so we may trade an FOMC style strategy for the end of the day stuff on earnings as well. So it becomes more specialized. Let's look at an easy language lesson for this. And so one of the conditions, say for example, I know this is a notepad, it's not an easy language editor, but I'm just using this instead of drawing on the screen. If max daily entries of date is less than 1, is the rule to say you don't take trades. You only take a trade if there's been no trade so far today. But it doesn't know, TradeStation doesn't know it's in a trade until the end of the bar. And so when you're in this situation right here, it doesn't know it's long until this bar. And so it could enter multiple times on the same bar with this setting. And so the reason the unexpected event had me exit early, that's why I exited early on that, with very little effect on the net result at the end of the day. So that's the easy language lesson I want to share with you. The way you can get around that is, going down to 1 second or 15-second charts, or recoding it so that, if this is, you'd have to recode it based on the proximity of the entry prices. I don't have a specific way to tell you how to do that right now. I'd have to experiment, but you have to take a look at your code and see how they could happen at the same time, and maybe create conditions to where they couldn't happen at the same time without changing the net result too much. So once again, the final live results for today's trade, and this will not be part of this gets us a little bit ahead. We take FOMC days out of the portfolio calculator. I'm going to show you that real quick. When you go in here to the portfolio calculator, you expand this, and you look at this, don't trade on FOMC. 1 means that's true. We don't trade on FOMC, and that's how we back test it. So we close all the workspaces on FOMC, and it's something that could change over time. Depending on the nature of the market, we may welcome FOMC if we find a really good strategy to trade it, and more counter trend strategies. So that is how we test it. So plus 630 is the final live result on the day for July the 26th, 2023. Thursdays and Fridays have historically been our best days, not recently, but we are in a losing streak, really, and so we're in a drawdown. So it's good timing to have a Thursday-Friday resolution. 3 trading days left in the month. This month has been very choppy, choppier than normal, and if you look at the time squeeze on making a move in the market, it's getting more and more compressed. And so one of the things I like about that is that you're going to get a move within a certain amount of time, and the longer it's been, the more likely it's about to happen, theoretically. And as we go into the end of the month, we just really haven't had it. So it's getting squeezed, and so a move one way or the other with 3 trading days left in the month, and we will work to take advantage of that. And turning on our stock index portfolio 34 tomorrow for live trade. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.